Ladies and gentlemen, welcome to the fifth and golden episode of the EMI podcast channel. Today in this episode, I have the honor of hosting Hugo Pascal, a renowned physical and paper gold trader based out of Singapore. In addition to his extensive activity in gold markets, Hugo is also a guest lecturer at the National University of Singapore, where he shares his extensive knowledge and deep expertise in precious metals with university students. Hugo, I'm really honored to host you here today. Thank you for taking your time during your trip to Bangkok. And I hope that we will be able to get some golden insights from you during this exchange. Yeah. Having said that, I would like to hand it over to you and to hear a bit more about your background and importantly to hear what led you to become a gold trader.
Hi, Riyad. So it's a pleasure to be here. And it's like not a tricky question, but like I'm gonna try to answer it like in a short way.
Please.
So my parents has never been involved into this industry, the finance one. So I didn't even have a sense of like, oh, what is finance? But I guess I was like Asterix and Obelix. So I fell in this kind of like a magic potion. Like I fell into the cold room when I was young. So I started to buy stocks when I was 17. So the day I started to trade, I never stopped trading, even until today. So it's been 21 years. And of course, once I started to trade, I was like, fine, I don't want to do like my parents, like architecture and all this kind of stuff. I want to be in finance. So I've done my master in finance in Paris. I started like a research analyst. Then I moved to New York. I was doing like cash management. So it was
in gold?
Not gold, no. Research analyst, it was automotive sector. Cash management, it was FX exposure, so mainly hedging. And at that time, most of my friends, they were like all into commodities. So 2015, I received one call for one of my friends, and he said, oh, by the way, we're going to start like a small scale mining in Brazil. So are you in? So I said, of course I'm in. So that's the day I started to trade gold. Like I started with the physical gold.
And now you're doing both physical and paper markets.
We are doing both, like physical and paper market. Actually, I will spend around 120 days on the ground. So we have boots on the ground. And yeah, most of my time I will go to Africa, Latin America.
When you say on the ground, it's in the
mining
camp.
Mining camps. And so we have boots on the ground. I have boots on the ground. But let's say 70% of my time is like monitoring market fluctuation, prices, spot market, future market, derivative market.
Very interesting, Hugo. I've also studied in Geneva. As you know, it's a global commodities trading hub. So I have actually friends from very different commodity fields, oil, gas, feedstock, proteins, and so on and so forth. But I've never met someone in the gold industry. So I'm actually very happy to know you and to hear your insights and stories about gold trading. I think we can really spend a lot of time speaking about because you have a very particular lifestyle. So I personally know how involved you are in your profession. You are really into this all the time. You're always connected and you're flying a lot. You spend a lot of time overseas, Africa, Latin America. I think we can dedicate a whole entire episode just, speaking about your lifestyle, about the way you work. But for this episode, I suggest we stick to fundamentals and we talk about the gold and the markets. Gold prices have surged in recent years. Since 2021, spot gold prices have increased by 70%. Yesterday, I checked the markets and spot prices hit the all-time high, the $3,000 per ounce. How do you see the future of gold prices in the coming years?
To me, you always have time. I mean, you should always buy gold, no matter what. If the market is bearish or if the market is bullish, you always have to buy gold because it's a great way to diversify your portfolio, number one. Number two, so we have Trump as a new president. During his first mandate, like gold went up 60%. From 2021 to 2017 to 2021. Why? Like first, the president loves gold. Second, he brings a lot of uncertainty to the market. Financial market, they don't like this kind of uncertainties. So let's say it's fuel to precious metal. You don't really know what he's going to do. One day we'll say, okay, I'm going to put 25% tariff. A week after it will be like, oh, finally I got like a great conversation. I will not put this 25 tariff. I will delay for a month or two. So all this kind of uncertainty plus geopolitical uncertainty too, I mean, they're adding fuel to the fire. So yeah, it's always a great moment
So
or time to buy gold.
you're long in the
My job as a
in
gold trader is always to be long. Yeah. So we will hedge our book, but like I always have to build long trades.
But do you think that within the next 2-3 years, a new all-time high like 4,000 USD per ounce is possible?
Yeah, I mean, not in a near term, but like you never know what can happen. You have
The future is uncertain.
Yeah, I mean, it's already so hard to predict what's going to happen today. So I cannot predict what is going to happen in a year, 2 or 5. But like when you see the way the market is moving, like the flow, you start to see like positive inflow into ETF, into futures contract, into option market. I mean, even if it's a bit like, I'm not going to say like overstretched or overextended, I mean, you can still participate in this market. You have many tools to participate in the precious metal market, very liquid. You just need to know which one. If you look at the option market, you will see, I mean, in my view, I mean, gold can reach like 3,300, 34,000 by the end of the year within, or let's say, within the next 12 months. Yeah.
Very interesting. Thank you so much for sharing
It's
your
my personal.
Yeah, the future is uncertain, that's clear, but I see that you have a positive outlook on the future prices of the gold. Gold and the US dollar have historically had inverse relationship, meaning that when the USD weakens, gold prices tend to rise. How do you see the future of the US dollar and how it will impact the gold?
So I will say until end of 2022, it used to be correct. It used to be true. Like a negative relationship between the dollars and gold, as you mentioned, when the dollars was getting weaker, gold was going higher. End of 2022, let's say right after like COVID, Ukraine-Russia war, you start to saw like a seismic shift. So I'm no longer looking at dollars or interest rate. I do, but not like the way I used to do it in the past, because you don't see any like a correlation between gold and between dollars.
So there is no longer statistically significant correlation
Like,
between the USD and gold?
Gold, the dollar since end of 2022 went stronger by like 12%, when gold went higher by 100%. So you have higher dollars and you have higher gold.
Absolutely.
So same for interest rate. I will look at the real interest rate. So it's like the 10 years yield minus inflation. The end of 2022, we were around like minus the real interest rate, minus 1.2%. Nowadays we are at plus 2%. So interest rate went higher, which usually it's not like positive for gold because it's a non-yielding asset, meaning you don't have dividend by owning gold. So if interest rates start to go higher, people will not buy gold because they will start to get more money on their cash.
Absolutely. Yes.
And gold went also higher. One main factor is like central bank, they've been buying like no way before the last 3-4 years, like around 1,000 tons a year. So it's a great inflow for the gold market.
And speaking about the interest rates, so that's one of the weaknesses of the gold, right?
Yeah.
The gold doesn't generate cash flows. So
that's what they say. I mean, what I'm saying, that's what they say. I mean, the mechanism behind is like not easy to understand. So I cannot sum it up in like few seconds, but like you can generate a bit of cash flow
with gold,
with this kind of arbitrage or like spot market, futures market. You can try to generate a bit. Yeah. But what you will never see in like on Bloomberg, for example, or CNBC, like the last 25 years, I mean, gold has been the top performing asset.
Absolutely.
Over almost like, I guess it's 950% from like 1999 to 2025. If you look at S&P 500, it's below 500%. So they're all saying, oh, you should buy S&P 500 because you have dividend, you have yield every year. But like actually gold has been doing great. Okay, people will look at 1800 to 2025, like 200 years time frame. But like, I'm not sure if it makes sense to look at 220 years.
There has been a speculation that a gold-backed digital currency might be implemented within BRICS. Some suggest that this could lead to some sort of a new gold standard system, similar to the Bretton Woods that we had before 1971. How realistic is this speculation, and what do you think overall from the impact of BRICS on gold?
Personal opinion.
Personal opinion, of
I
course.
don't see it coming yet.
Mhm.
Why? So dollar is still like the main currency in the world. Like FX exchange is like 90% in US dollars. Like central bank, like foreign exchange, they own like 58% of US dollars. And international transfer, it's around 49% per year. So actually people have never used dollar that much. I mean, yeah, they never used that much dollar
As today.
as today to do all kind of wire transfer, international
Very
transfer,
interesting.
settlement. And on the second part is like, if you want to get back to Bretton Woods, or if you want to use gold, like gold is like a currency, it's like a monetary asset. So if you buy gold, you sell dollars. Or if you buy gold, you can sell yen, yuan, or whatever currency you want. It's always a pair. You're trading a pair. It's not I buy gold. In order to buy gold, you need dollars, you need euro.
You need currency.
You need currency to buy
Fiat
it.
currency, yeah.
So if you want to get back to this one, it's like, how will it works? Like, will they do like a barter? They will exchange gold? I mean, exchanging physical gold from two countries, it's a bit tricky. I mean, it's not like instant payment. Or will they swap it? Or the best way to like, okay, I have gold, but I sell it to get what? Yuan, dollars. So again, you have currency. Or you can do to me, I mean, the easiest way to do it is like to tokenize this kind of like vault, like gold vault for each country, and like you exchange on ledger and all this kind of stuff.
So a digital currency backed by gold.
And
yeah,
that's the way I see it, because like you can only like do a barter with this kind of exchange. And most of these countries, like third world country, so finance is in bad shape. They have a lot of US debt. So
it's true. But you know, I've recently talked to people who are within the BRICS group, and who are in charge of the implementation, for example, of the insurance policies within BRICS, because as you know, the insurance market is a monopoly dominated by the Western countries, and that's partly a problem for some of the BRICS members. I've talked to people in charge of the cross-border payments system implementation within the BRICS, and I must say that there are very serious initiatives, and actually these countries, they are seriously considering these options. They are working on it because they don't want to rely solely on dollar. But as you have mentioned, as of today, dollar is.
And last one, like Trump say, if you try to de-dollarize, I will hit you with 100% tariff.
Yes, yes.
You have to tell me what to do it. I'm not saying it's not impossible. Of course it's possible, but like I'm sure it will take time.
Absolutely. We talked about the USD, about BRICS, United States. Let's pivot to London. London remains the center of global gold trading, and the London Bullion Market, the famous LBMA, is the world's largest gold exchange. Why London? Why this gold market and overall the metals market? Because there is also LME, right? The London Metals Exchange. So why these markets are in London?
I mean, to understand, we need to get back in time, like in mid 18th century.
I love history.
Like Great Britain was like one of the biggest empire, or they were like the biggest
the British Empire,
it was the biggest commercial nation in mid 18th century. And during this time they were the first one to open the first vault. It was 1732. They opened their first bullion vault with the Bank of England. So I guess that's why like London is still the number one. It's like a historical, but they are still the number one place in terms of like they are the biggest one for like physical gold. Okay, we call it OTC market, but they are the biggest one.
Over the counter.
Over the counter. And every day, only in London, the amount of gold you will trade is like almost 50% of the yearly mine production. So you have huge leverage. If you combine with like New York, so CME, Shanghai, the three main exchange, I mean, you will reach close to 3,000 tons per day, which is more or less what we are producing in a year. So imagine this kind of leverage you have in the market.
Do you see emerging and alternative markets to LBME? For example, I've heard that Hong Kong is emerging as a potential competitor to London. I know that in Dubai, many people trade gold, family offices, a lot of gold coming from Africa. So yourself, actually, you are based not in London but on Singapore. So you're trading gold out of Singapore. So how would you comment this global dynamics?
I'm sure we will have new exchange coming in, but like in order to compete with like LBMA, I mean gold standard, I mean they set all the standard. So every time you want delivery, like based on your exchange, you have future contracts, you want to exchange it to physical. I mean, it has to be LBMA gold bar. Okay. At the moment, it's hard to get LBMA gold bar because you have like a huge volume. I mean, okay, it's complicated to explain, but like each exchange, they will have like a specific format. Like for example, in London, you will get 400 ounces gold bar, 999.95 purity. If you want to ship it to New York on the COMEX, they only want 100 ounces gold bar. So first you need to recast.
To recast
your gold into, you have your 100 ounces, 400 ounces gold bar in London, 99.95% purity. You need to recast. So usually you ship it to Switzerland. They have the biggest refinery. They will recast into 100 ounces gold bar. And then you ship it to New York. Or you can do it in New York. But in order to be like COMEX approved in New York, it has to be 100 ounces kilobars.
Why there is no one global standard, which can be applied
everywhere? Exchange, they have all these kind of standards. I don't know one. Like in Shanghai, for example, you will get 1 kilobar. New York, you can also get 1 kilobars. But like they all have this kind of like, in order to be in like CME vault or LBME vault to SGE vault, I mean, you need to follow this kind of like standard.
You need to refine the bars.
And it has to follow the LBMA criteria, which like in Dubai, I mean, they don't. None are approved LBMA, none. None of the refinery in Dubai are approved LBMA.
And I think it's a great transition to my next question about the ethical gold sourcing, which remains, I think, one of the key issues in the gold markets. While gold is a great hedge against inflation, weak USD, weak currency, against geopolitical turbulences, macro turbulences. The key issue is the ethical sourcing, which has not always been done in a proper way. How do gold traders, central banks, and other stakeholders ensure responsible sourcing of gold?
I guess the short answer is like they will close one eye. It's extremely difficult to be able to track gold from a mine. I mean, large-scale mining, no issue. Mid-scale mining, no issue. All these kind of people, they have account with the biggest LBMA refinery. But the main issue is on the small-scale mining. Like, to track this kind of production is like, I mean, I'm from the small-scale mining world, so I know it's almost impossible to be able to track it. And second, you have top-tier refinery, the LBMA one, and you have the second-tier refinery, non-LBMA one. So this kind of non-LBMA, they will buy gold from all around the world. They don't really ask questions about origin of gold, like conflict gold or gang, or like financed by gang, or like all these kind of questions they don't ask.
Child labor.
Yeah, child labor, like all you get, like similar to all kind of blood diamond and all this kind of stuff.
Yes.
They don't ask questions and they take whatever gold is coming to them.
Yes.
Especially in
below
Dubai.
the LBMA prices. Or not?
No,
not really
it's
necessary.
extremely competitive.
It's very competitive.
So they will, of course, it's a bit cheaper, but like they will take it more or less at the same price. And they don't ask any question. When if you want to sell back to a refinery, I mean, they will do like a due diligence for 8 to 12 months in order to be approved. They will also go on the ground to check operation, who is working on the mine side, who is controlling the mine, who you have behind, all this kind of stuff. In Dubai, okay, I'm not going to give any name, but like,
yes.
Yeah, it's extremely easy. They keep saying like, oh, we're going to make it harder, we're going to make it less easier, but like, it will change, it's changing, but like not as fast as it should be.
Yes.
So even in Latin America, they can sell to the US some like not really LBMA gold, like all kind of country we have this kind of issues. And in my opinion, you will never be able to resolve this kind of issue. Like journalists who are keep like tracking this kind of stuff, I mean, they've never been underground, or they've been underground, but they don't really know the supply chain. They don't know, like, this kind of people, it's like you and I, they need to eat, they need to feed their family.
Mm-hmm.
So they will do whatever they can in order to be able, like, to put rice on the table every day. They don't mind about, like, if it's LBMA, non-LBMA. They just want to sell their gold.
Do you think that sometimes in the LBMA refineries, LBMA approved refineries, you have unethical gold
They have
in
100%.
100%?
They even pay fine. I'm not going to give any refinery name, because they've been taking this kind of gold from Peru, from Colombia, from Africa.
Yes.
So it happened, and it's still happening.
And do you think that the technology like blockchain can help to, you know, bring a bit more traceability and transparency to this industry, or it will always remain a shady area?
To me, it will always be blurry. It will remain blurry. It's like so easy to mix it. It's so easy to transform it, to melt it. Like, yeah, it's extremely hard to keep track. And at the end, to know origin of gold, I mean, it's almost impossible.
Speaking about the blockchain, some cryptocurrency enthusiasts argue that Bitcoin is the new gold. And I was wondering, how would you respond to the claim that Bitcoin can replace gold as a store of value?
I mean, my answer will be like straightforward. Of course, like from my background, to me, like Bitcoin is not a digital gold. I mean, they will find like similar, like, how do you say it? Similar, not opinion, but like, yeah, similar aspect between gold and Bitcoin.
Features?
Yeah, features, but like, I don't find any actually.
Me neither.
So in the, like, it's digital. So the digital part, I like it. Like blockchain, like it's really useful. Like even in commodities, we start to use it.
Yes.
Like you can exchange data, you can exchange money. So it's wonderful. You have tokenization, which is also a second point, which is very useful. You can tokenize property, you can tokenize precious metal, so you can track it. And the last one is like the useless one, which is all the coins. I mean, to me, they have no value.
It's a line of code.
It's a line of code, and it's just like a speculative tool.
Yes.
You are buying Bitcoin because you believe it's going to 150 or 200,000. Why? Because someone else believes it's going even higher, so it will buy it back from you. But like behind this kind of Bitcoin, I mean, they all say like, oh, it's like away from the system. But to me, it's like not anymore. You have BlackRock in it. You have like the government in all this kind of coin.
There is one common feature actually. So we say that there are no common feature, but I mean, thinking backwards, I think that there is one common feature, which is trust. So Bitcoin, I mean, people start having trust in Bitcoin, but I think it's some sort of a momentum. I don't think that I believe that it's oversimplistic to compare one of the oldest asset class, such as gold, right? For 4,000 years, this asset class has been, you know, trusted by the different civilizations, and versus Bitcoin, I mean, a decade, right?
15 years. Yeah.
15 years. So yeah, I think that this is an important aspect when we compare this to asset classes.
I mean, like talking about trust, you mentioned trust. I mean, I don't have trust in crypto coin. I have trust in my gold.
I love this. Hugo, we have just a few minutes left. Maybe we can dive a bit to the technical aspect for the, you know, more technical audience, which would be curious to hear some insights from you. Gold trading versus gold investing.
Yeah.
What are the key differences, and you know, what are especially the differences with stock markets? I mean, trading stocks or investing in stocks versus trading gold, investing in gold.
So investing or trading gold, nowadays you can do it the same way you will buy or sell one share. Okay. But like what is specific to gold is like, to me, like if you don't own it, I mean, you don't have it. Like if you have a long-term investment strategy, the best way is to own physical gold.
Physical gold.
I mean, to trade it is easy. You have all kind of platform. they offer you all kind of product to be able to trade it. But it's more like a short-term bet. Like if you want to implement long-term strategy by doing trading with like futures contracts, option, or even CFD, or even like
Yes.
ETF, I mean, all this kind of stuff, I mean, you need to check it, not daily, but like you need to check it, you need to understand the way it works. And yeah, it's harder because you need to be active. Okay, it's not passive investment when you are doing all this kind
Yes.
of stocks or ETF or futures. When you have physical gold, I mean, your only concern is like to store it in a safe place. You keep it and you wait. They will say you have storage cost, but nowadays it's not that expensive.
I personally don't believe in charting. For me, it's some sort of, wizard stuff of things. What are your, what is your methodology when you do short-term gold trading?
I mean, it's nice to hear because like you have many people, millions or even billions of people, they only believe in like technical analysis. And to me, like technical analysis is more like a retailer scam. I mean, I'm not saying it doesn't work. Of course, like most of the algos or bots, like they will look at all this kind of level, like you will see on the chart, no doubt. But why you have this kind of level, like for example, 2000 on gold or 2800, because you need to look like under the hood. So in order to look under the hood, you need to look at the derivative market, which in my field is like the option market, option chain. That's the one I will like monitor daily. That's the one we will do query daily on the option chain to see like probability to reach XYZ target. Like, is it bullish? Is it bearish? Do we have people buying more puts, meaning like hedging? Do we have people buying more calls, meaning like upside? And to me, the derivative market is more like your crystal ball. People are laughing when I say this one, but like that's actually the only one I will look at on a daily basis, constantly. That's the only one I will have. This is the best tool to analyze any kind of market when it's like a liquid market. So that's the one I will. And all my forecast, all my prediction, all my daily analysis, like daily trade, day-to-day stuff, it's only based on the derivative market and the option chain.
Hugo, the gold trading is an ocean, and you're clearly a shark in this ocean.
Yeah.
And it has been a huge pleasure to have this discussion with you and to hear you. And really, thank you so much for
My pleasure to
coming here.
Thank you for inviting me.